Wagon makers are a happy lot despite the GST rate being hiked for wagons, coaches and rolling stock. That's because they can make use of higher input tax credit. Joining us right now to talk about this is Titagarh Wagons Vice Chairman and MD, Mr. Umesh Choudhary. Mr. Choudhary, thanks very much for taking the time and joining in. Could you highlight for us the implications of this GST hike?
Sure. Good afternoon. Since the introduction of the GST, which was extremely progressive, we have been, as railway rolling stock manufacturer, has been representing to the government that there was an apparent anomaly in the rate fixation of the railway rolling stock, wherein our output was being charged at 5%, whereas most of the inputs like steel, electrodes, etc., that we had to purchase was being purchased at a much higher GST rate. So as a result of this, we were having a negative cash flow problem. And with the increase in the output GST to 12%, this accumulation of input tax credit that we were having for every transaction or every sale that we were making, this would get corrected. So this was not only advantages, this was absolutely essential for the industry, which has been suffering a lot on the cash flow issues on account of this inverted GST structure.
What is the impact now with the higher input tax credit and the increase of the GST to you?
So now it will be almost neutral. So we will not have, any accumulated GST credit going forward from now. We'll be able to set off all the input tax credit against the output GST payable.
Okay, so no outflow there. But let's talk about the top corporate tax levels being brought down as well. What was your tax bracket, and with this corporate tax level being brought down to about 25.17%, what would the savings look like?
Sure. So as far as standalone Titagarh is concerned, we were in the highest slab of tax bracket. In our consolidated, because of the other companies, other subsidiaries that were not making profit or that were in losses, that was not getting reflected. So definitely we will have this entire 7-8% of savings coming forward. So it does mean an advantage to us on the standalone results of Titagarh Wagons.
The FM also said it is a choice whether you move to this structure, you stick to the original structure with all the added benefits and concessions given previously. Would you stick to the old structure, or you would transfer into the new structure under the 25% effective tax rate?
So we've on the very face of it, I can say that we would definitely like to move to the new structure. Of course, the details are being worked out by my finance team, but the back of the envelope basis, the calculations are much in favor of moving to this new structure and not using any of the exemptions.